Right now, I want to talk about the Lone Star Capital strategy in 2023 and beyond. But what we're looking to do right now is deals that make sense with fixed rate Freddie debt, likely less leverage, considering where rates are at right now and how valuations of these properties have gone up. If for us to have consistent cash flow and whatnot, leverage needs to be down, and we likely need to be doing fixed rate debt just for consistency as opposed to bridge debt or floating rate debt. We're also looking for deals that maybe have a management issue. Perhaps there's bad people in the leasing office that don't get back to emails or phone calls, or not the most welcoming. So little issues like that really deter tenants from wanting to come and rent. We're also looking for deals with higher occupancy and for offerings that have less of a lift. What I mean by lift is something that has 67, 80% occupancy, where there's a stigmatized or perhaps a stigma with the property that is not the friendliest for anyone new to come in. Another thing that we're looking for is properties that have units that have not been upgraded in a while. Perhaps there's an 80s or 90s vintage property that has been stuck in essentially, unit vintage and class of the olden days, where they have not been upgraded for maybe 10, 20, 30 years, and they need to be spruced up. And because of that, they're not close to par in reference to where the rent numbers could be. The reason why we want to do this is so all of our investors can sleep well at night. We don't want to take on super risky properties because we want cash flows to be consistent and monthly and to hit our projections, so everyone could sleep well at night, and there's not a bunch of risk when you look at this investment offering juxtaposed to other properties that have a lot of massaging to do and a lot of upfront work to hit their numbers.